I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Hello everyone, this is Ahmed Shawi by Liquidity Club. Today is Sunday, the 27th of August 2023. I'll be going over the weekly review. So let's dive deep into it. So let's starting with the DXY. We have the weekly chart here. Last week trading, we traded below. We failed to reach to the weekly inversion fair value gap. We were very close to it. We formed a small fair value gap here and started trading higher. We were very close to reach to the wick consequent encroachment of this candle. And despite our liquidity. Now going for the upcoming trading, I'll be looking for these liquidity pools to be met. Now, if you look at it in this POV, that we are closer to this buy side liquidity than rather than this fair value gap. So I'll be looking for these levels to be reached in the upcoming upcoming days or upcoming weeks of trading. I don't know when price is going to be reaching to these levels, but I'm preferring price to reach to these levels first before trading to this fair value gap. Going to the daily chart, as you can see, the same thing is said here. It's a good point to pay your attention here that we formed the low of the week on Tuesday and we formed the high of the week on Friday. Going to the ES, we have the weekly chart. As you can see, this week's trading, we formed the inside out candle. What does that mean? We formed a high that is lower than the previous week high, and we formed a low that's higher than the previous week low. So that means that smart money are accumulating positions at the moment. So they are building positions and building orders above and below the marketplace, which will facilitate and will permit them to manipulate the marketplace to make use of both sides of the marketplace. Now, we traded higher this week, filled this potential fair value gap. We reached to the low of this candle, and we have a bit of an over coloring of the lines here. Now for the next week trading, we'll be entering September. So it makes perfect sense that this signature price is seen. Why? Because in September, October, November, and the first 2 weeks approximately of December, they're the 4 months, and the market has been known that it has been offering and solid and smooth moves during the 4 months. So for the upcoming trading, I'll be looking for this consequent encroachment of this week trading of this premium wick to act as a resistance that sends price lower to this small inefficiency and this daily fair value gap. Going to the daily chart, as you can see, I want you to pay close attention to this daily bearish order block. Notice how we traded Monday, Tuesday, we kept trading, trying to reach higher. Now on Wednesday, we reached higher to this daily bearish order block, and on Thursday, we also accumulated more positions at the daily bearish order block, and we started trading lower. We formed the high of the week on Thursday and the low of the week on Friday. Now, I want you also to pay attention to where we closed. We closed approximately at the consequent encroachment of this discount wick. Now, for later on, I want to see price trades below it and treat it as resistance that sends price lower to these levels here, to these strong liquidities that have been shown on the weekly chart. These are the weekly fair value gap, and this is a weekly fair value gap. Going to the NQ, we have the weekly chart here. You can see that price has not been printing the same candle that the ES has created. The ES has created the inside out candle, which has a high that is lower than the previous week high and the low that is higher than the previous week low. But here on the NQ, that wasn't the case. Price has created a higher high than previous week high, and it's looking like it has formed a swing low. So why did price go above high here? Because there was a small inefficiency here. If you go to your lower time frame charts and you can annotate the this week, this candle's low and this candle's high, and you can see that there's a small inefficiency that reside there between these two levels here. So price did perfectly trade higher, fulfill this small inefficiency, and was very close from reaching to this weekly bearish order block and started trading lower. So the same thing is said, I'm still looking for this weekly fair value gap to be reached. Going to the daily chart, as you can see here, we have a bearish order block. This is a weekly bearish order block. This is nested. This is a BDRA that's nested from the weekly chart all the way down to the daily chart. Now we have a daily bearish order block which overlaps with a small inefficiency that is found on the weekly chart. Price has repriced all the way up to fulfill this small inefficiency and to accumulate more positions at the daily bearish order block and started trading lower. So I'm still looking for the sell side liquidities and the weekly fair value gap to be reached as a means of drawing liquidity. Going to the Dow, this is the weekly chart. As you can see, we've been trading lower, and it's actually a pretty anticipated to be trading lower to reaching to these sell side liquidities, because we've been seeing the other averages, other indices, the NQ and the ES trading lower and reaching to sell side liquidities. So it's perfectly fine to see this Dow, this index, to be trading to the sell side liquidity. Now I'm looking for the upcoming week or the upcoming trading. What I'm preferring here is that we trade below the mean threshold of this bearish order block. I'm leaving this as a assignment for you, as an homework. You can go to your chart and you can take your Fibonacci from this high to this low, and you could plot your mean threshold of this bullish order block. We won't see price after trade and close below it. We won't see it traded as a resistance that sends price lower to the sell side liquidity. Now, if we trade below it and we take the sell side liquidity, price might not reach to the mean threshold and as a means of as a resistance. So it might just keep continuing lower to the other draw liquidity, such as the consequent encroachment of this wick, the discount wick, this low, and the consequent encroachment of this discount wick and the sell side liquidity. So it's a bit of futuristic move to the future, but I'm just telling you what I'm preferring at the moment. Going to the daily chart, as you can see here, we've been selling off. I want you to pay very close attention how we acted, and we've been acting here at the bullish breaker. So price has formed a very clean lows. This is algorithmic price action here, and then we keep trading inside this range, which is the bullish breaker, and then once we close below it, the low and the mean threshold can be used as means of an inversion levels. So any BT array that is traded through it would be used and utilized as an inversion level. So we have the low and the mean threshold of the bullish breaker as an inversion bullish breaker. So price did trade all the way up to the mean threshold. It was very close to reach to the mean threshold of the bullish breaker, and it has repelled away. So I'm still looking for the sell side liquidity to be reached next, since we've seen this signature price. This signature price is very strong. Going to the Euro USD, also known as the fiber. This is the weekly chart. As you can see, price has finally reached to the sell side liquidity that I've been talking about for weeks now, and it has been on my chart for weeks now. You can go back to my weekly reviews in the past 2 or 3 weeks in the past, and you will see that I've been calling this level to be reached weeks ahead. So we traded to it. Now we have a fair value gap here. Now for the retail trader or the people that do not know how to trade, because it's not just to study it and just to trade any fair value gap, because we have a fair value gap here. Some people might think that this is the model 22 that is taught by my mentor ICT, which is clearly not. This fair value gap, after we close below it, is going to be called the inversion fair value gap, which is going to be used as an inversion, as means of an inversion level that might send price lower. The low, the mean threshold, the consequent encroachment, and the high of the fair value gap, which is going to be the inversion BD array, can be used as an inversion level that can be sending price lower to sell side liquidities. So this is not a buy here. I want you to pay very close attention that it's not a buy here. So you need to understand what market is doing and not to trade any BD array blindlessly. So you have to be careful when trading. So we have it's yet a fair value gap at the moment, but once we trade and close below it, it's going to be an inversion fair value gap. Notice also this week's trading how we traded higher, reaching to this weekly candles low, filling this potential fair value gap. So we have nothing unfulfilled. So everything is efficient and filled here above. We have just this buy side liquidity, and if we reach to this buy side liquidity, we might also reach to this buy side liquidity. So I'm still favoring the sell side liquidity at the moment here. The consequent encroachment of this discount wick and this sell side liquidity, this sell side liquidity, and this sell side liquidity are going to be my next draw liquidity. Going to the daily chart, the same thing is said here. Notice how we traded below the bullish breaker here, and we treat it as resistance. Notice the bodies, only the wicks are trading higher. So there's no bodies that there are no bodies here, candle bodies that are trading and reaching to the bullish breaker. So this gives you a confirmation that we're gonna trade lower. Price has traded to the bullish or the bearish order block here. This might be called later on, once we trade below it, a bearish order block that is classified as a bearish proportion block. So yeah, I'm still looking for a run below the sell side liquidity that is highlighted and annotated. I've been calling out to on the weekly chart. Going to the pound, also known as the K-bone. This is the weekly chart. As you can see on the pound, it has taken the sell side liquidity and it has closed below this weekly inversion favor. Now it's called a weekly inversion fair value gap because we closed below it. So not every fair value gap is a means of trading. So you don't go long at any fair value gap, or you don't go short at any fair value gap. You need to have a narrative. You need to understand what the market is doing. You cannot just trade blindly. So we closed below the weekly inversion fair value gap. So I'll be looking for this low of the weekly inversion fair value gap and potentially the consequent encroachment. Because of this, we have this low here. Price might trace to fulfill this potential fair value gap. So I'll be looking for the consequent encroachment and the low of the weekly inversion fair value gap to act as a resistance that might send us lower to the sell liquidity. Also notice that we swept the previous week high, which means we facilitated and we've engineered more orders and more liquidity into the marketplace that sends priced to the sell side liquidity. Going to the daily chart, as you can see, we closed below the weekly inversion fair value gap. Are we looking for the low, as I've mentioned, and the consequent encroachment to act as resistance that sends price lower to these sell side liquidities here, these levels. You can annotate and highlight these levels on your chart to see price reaching to them in the future. This is what I'm thinking, because basically there's not much, like we've been taking the buy side. As you can see, this is a signature here. When we are in a bearish institutional order flow, a run stop over a high or over a up close candle is going to be very fast, that it's going to be immediately going lower, and this is what we are seeing here. So I'm still holding no strict bias. I'm still favoring the run to this sell side liquidity here, but price can do whatever. We can, after reaching to these sell side liquidities here, price can reverse and trade higher and make a bullish breaker here, a future bullish breaker, and start trading higher to this buy side liquidity. So we still need to be very careful when trading until we enter September, which is going to be next week. Now, just for your info, next week we are going to be having a non-farm payroll on Friday. So it's very important from your side to be not trading to stop your trading business by Wednesday New York AM session, which is at 9:30 a.m. So that was pretty much it for this weekly review. Next week we're going to be entering the September month, and to be specific, the 4 months. So they're going to be offering very solid and smooth moves in the marketplace. So yeah, we are expecting a good trading environment and conditions in the upcoming months, especially September, October, November, and if you're really hard pressed into trading, the first 2 weeks, 1 to 2 weeks of December. That was pretty much it. I hope you learned something from it. And until I talk to you next time, be safe. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.